All right, welcome to the daily market recap for Monday, October 6th. In this video, I'll be going over the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like I do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting with the indexes, we got the NASDAQ, another gap up, very strong close up another 0.75 or 0.75%. I covered this on the video on the weekend, but we are definitely in the acceleration phase of this uptrend, which is the most fun phase to trade. But when it does snap, we tend to see some pretty brutal price action to the other side. And what I mean by the acceleration phase is kind of zooming out here. We already had this huge uptrend from the April lows. Eventually, we get a pullback to the 50-day moving average. First test of that area is usually a great risk reward spot, and it showed that exactly on September 2nd. So tested the 50-day, rallied up, had kind of a 3-day pullback 2 weeks ago, basically got into the 20-day moving average, so a shorter duration moving average. That got supported. Then we got a pullback to the 10-day moving average on the government shutdown. That got supported. And then on Friday, we had a little shakeout towards the end of the day to the 5-day moving average, and that was supported. So from 50-day to 20-day to 10 to 5, you're just seeing kind of stair steps up and that trend really accelerate to the upside. And today's big gap up and strong close kind of shows you what type of market that we're in. S&P 500, new all-time closing high up 0.36% with a small gap up. One thing that I'll be looking for to see if that trend is snapping to the downside is at least a close under the 5-day moving average. That would be a sign that at least the short-term volatility or the short-term momentum is starting to snap to the downside. Until then, I would be looking for longs or just letting the positions that you have kind of rally. Starting new longs at this point, like unless you're really shortening your time frame, is going to be pretty tough to sit through some of these moves. IWO, the growth stocks of the Russell 2000, another gap up, another 52-week high on a closing basis, and I guess price action as well. So good price action there. ARKK, another ETF that I use for like a risk on, risk off indicator, continues to ride over that 5-day moving average on the expansions upward. Any pullbacks got supported at the 20-day, then the 10-day the next day, and so far the last 7 or so trading days, every time it pulls into the 5-day moving average, it just finds more buyers there. And then IBIT as a way to track Bitcoin. Bitcoin all-time high today. That's not usually bearish as well. So we've got the NASDAQ at high, the S&P 500 at highs, IWO at highs, ARKK at 52-week highs, and Bitcoin making all-time highs. That's a great market to trade on the long side. Just know that once we do get that snap in momentum, that's when we can start looking for some shorts, sell our winners into some weakness. But until then, the last couple days, maybe even weeks of an accelerated move, you can make some pretty good money to the long side. Take a look at QQQ and S&P 500 back in 2020, August to September. There was a nice run up into that accelerated blow off move, and then we had to base for about 2.5 months. Getting into the liquid leaders, I did have to replace APP. This was down 14% today, losing the 5, the 10, the 20-day moving average on news that they're being investigated by the SEC. We're in such a strong market, no time to even give this any time to bounce back up. Just replaced it with RKLB, position that I own. Bought it on October 1st in the group. And from there, just really strong price action, up 9.4%, up 7%, and then into a new all-time high, up 4.1% today. Beautiful volume coming in with that expansion. And one of the few stocks that had a quality base to start to break out of at this point in the trend. Next, we got Tesla, just perfect price action over the last 3 days. We got extended in the short term. We kind of had a sell the news event on the Tesla deliveries. It was very extended in the short term. Anyone who bought that news as it was already extended got hurt over a 2-day pullback. We had the bearish engulfing candle on October 2nd, followed through to the downside on Friday. But look where we bounced at. Exactly a perfect undercut of the support gap low, just above the 20-day moving average, showing that buyers are still stepping in soaking up the float here. It was just too extended in the short term, had to punish those late buyers. Pullback buyers got rewarded. And then today, awesome gap up, very strong close up 5.5%, right near 52-week closing highs. KTOS continues its very clean uptrend, just over that 5-day moving average. Not a single close under that point. A close under that would be a character change at this point in the trend. We covered RKLB. Next, we have LEU. Nice action, up 3.5% today. We saw some really good action out of some other nuclear names. OKLO, as you can see, I got to update this chart. Closed over the support gap or the resistance gap, back up another 5.7%. And then kind of a secondary name, NNE, up, what was this, 20.5%. So strong theme work as well in LEU. Google, we were talking about whether this was going to close below the support gap and the 20-day moving average on the downside, or this resistance gap on the upside. And we got our answer today, a close above the resistance gap. More evidence that we're in a very strong market. Momentum is still on the market side. So there's no reason to get aggressively short anything. There's no reason to be bearish just yet. Alibaba, very clean, just pull back to the 5-day moving average, consolidating one of the better looking charts in the market, breaking out of a 3.5 year base, just massive amounts of accumulation on the way up here. Definitely a stock to watch for when it does kind of pull back either to the 10 or the 20-day EMA. NBIS, a little bit of weakness today. We gapped up, made a new all-time high, and then closed at the low of the day, but on lower volume, still over the 5-day moving average. If you've seen my videos, I don't really consider this bearish at all until we follow through to the downside. Otherwise, this is just a low volume consolidation over the 5-day moving average, which is bullish. Robinhood, bearish engulfing candle, down 3%. I think they had an outage at one point today. I saw some things on Twitter that people couldn't get into their Robinhood account. Obviously not good, but it was only down 3% on lower volume than average and lower volume than Friday, and still closed over the 5-day moving average. A spot to watch is the 10-day moving average in this gap zone at 139 as a potential undercut and reclaim there. And then BE starting to stall a little bit at all-time highs. Had a great snapback from September 25th up until basically today, made a new all-time high. But we're starting to churn at those highs instead of accelerate with the strong market. So any follow through to the downside, that'd be something that I would be looking to potentially short. Next, we go to the industry ETFs. First, MSOS. This is a cannabis ETF. Another close over the 5-day moving average. Gapped up last week, up 28%. Since then, had a lot of volatility, but again, every close over the 5-day moving average, this is being accumulated in a real way. NLR, this is the nuclear and uranium ETF. New all-time highs today. We covered the OKLO, the NNE, we didn't cover SMR, but that was up as well. So really good action and really good volume profile here. Big accumulation bars on the way up, lower distribution bars on the way down. Blockchain ETF, new all-time highs. Semiconductor ETF, new all-time highs. Gold miner ETF, all-time highs. Robotics ETF, all-time highs. Transportation ETF, highs for this rally. ITA, the aerospace and defense ETF, new all-time highs. Cybersecurity, new all-time highs. Software, IGV, had a little bit of a squat today at the end of the day. We'll see if that's just a squat, then we take out this pivot. And if we do, it's probably more momentum to the upside. Otherwise, I would just keep an eye on like the gap zone low from today to see if we can continue to close over that area. Any other groups that I wanted to cover? Biotech's continuing its uptrend over the 5-day moving average. XLF, the financial ETF, has been very volatile without any price appreciation. It's one of the groups that I'm a little concerned about, but today we bounced at the support gap and then we got rejected at the resistance gap. So kind of similar to the Google setup. Whichever way this breaks, do we close above the resistance gap? Do we close below the support gap? That probably signals the next step in the trend, whether we're going to be trending higher or lower. So I've got alerts on both sides of this just to get some market feedback. And then going back to the average consumer issue, consumer staples is starting its stage four downtrend. So anything that the common, like the average person spends money on, is not acting very well. We have consumer staples in a stage four downtrend. XRT, the retail ETF, bearish, well, not bearish engulfing, but open on the high, closed on the low, back through the 5, the 10, the 20-day moving average, down 1.9% today. And then home builders, kind of a bearish engulfing candle today on a pickup in volume. Let's see if we can maybe put in a higher low here and then start to trend. But we're seeing a lot of stocks where the average consumer, they are not getting much traction there. Do want to cover just a couple extra stocks today. The quantum names, RGTI. I see so many people trying to short this, and I will eventually short these names, but we are in a momentum market. We just covered everything that's at all-time highs. These are like the momentum names in the market, and they're not doing anything wrong. They're not acting erratically at all. The volume is picked up, but it's not massive. It's not overwhelming until we see like an unfilled gap down or a close under the 5-day moving average or just unbelievably massive volume on an extension bar. I think these are still going to go higher. RGTI made a new high. IONQ made a new high. QBTS made a new high. So as much as people want to short these names, and eventually they're going to be great shorts, just wait for momentum to break to the downside. You're going to have plenty of time to short them on the way down. I've done this before, and that's why I'm saying it. Trying to fight the strongest names in a momentum market is a really great way to be super frustrated. Then, when they're actually ready to crack, you're not going to be confident enough to ride them to the downside. Getting into the long and the short setups, I only could find 5 long setups, which makes me feel like we're a little bit closer to the end of this trend than the beginning. First one is Tesla. I don't even think this is like very ready. I just have alerts under the 10-day moving average at the gap zone low, right around 430 as a potential add spot. I would love to see like the market pullback and then this retest the support gap. But if the market stays steady, I think the 430 spot is probably your best bet. Then you can manage your risk against the 20-day moving average. HIMS, I bought this today. Anytime a stock has a really ugly close on big volume, and then the next day has an unfilled gap up, that's usually a good spot to manage risk against, like the previous day's low. And this played out really well. Actually, this was weak throughout the day. I bought it early in the day and just kind of sat in it while the rest of the market was ripping higher. Then by the end of the day, it caught a bid, ended up 4.2%, closed back over the 20-day moving average. But this is the type of name that it just hasn't gone away. And we're in the type of market that these types of stocks can make big moves. So instead of trying to buy it extended, I wanted to kind of sneak in at a spot that was like lower risk. Um, if you're not in the stock just yet, I would be watching for like a little bit of a weaker open and then a reclaim of today's closing price. So like a red to green move as the entry. Stop would be Friday's low. CRWD, CrowdStrike. I should have had this gap drawn. But 2 different spots to watch on here. I will be looking at the lower one for more size. Under the 10-day moving average, into the support gap at 480 would be the buy spot that I'm most excited about. I do have alerts just above the 10-day at today's gap low, right at 491. Either way, that would be a higher low all overall in the cup in the handle. And we're seeing a lot of cybersecurity stocks actually setting up to go higher. So if the market does continue to trend higher, this is the next group that I think is going to catch a bid. Next, we have CRSP, CRISPR technology. This is a biotech stock or biotech type stock. We covered XBI, how that's been in such a clean uptrend. I'll just be looking for a pullback into the gap zone to the 10-day moving average, right at 66.25-ish area as the entry. Manage my risk with a 2 or 3% stop. Then finally, we have Lemonade. This probably was buyable today, and I don't know if we're going to get another test of the support gap of the 50-day moving average. But you could play it through today's high as the entry. with this type of shakeout in the market that we're in, that might be all we need. But I would love to see like one really quiet day right above all the 5, the 10, the 20-day moving average, just so we see some consolidation and we can manage our risk a little bit tighter than kind of just randomly putting our stop at a spot like under the 5 and the 10. Then on the short side, we'll go most liquid to least liquid. First one is Amazon. Kind of going back to the consumer, like the average consumer being weak, Amazon, like you would think in a tech boom that we're in right now, would be ripping higher, and it has not made new all-time highs after the sell-off in April. And when it got up to that resistance gap, it gapped down, which is the last thing that you want to see if you're long at a key spot is like strong close, then a gap down. Then we had a lower high, lost the 20-day moving average with a gap down, lost the 50-day moving average on a pickup in volume, kind of just trading sideways. And the market's been so strong at this point, this should not be trading sideways. I do want to short this on strength versus weakness. So a rally back up, kind of between the 20-day and the 50-day, is the potential entry, and then keep your stop over the high from September 23rd. Costco, I kind of covered, I think I've covered SFM, but Sprouts, this is a grocery store, stage four downtrend. A lot of like food stocks, Chipotle, stage four. Um, what are some other ones I'm kind of blanking on? Sweet greens, stage four. So I think Costco is going to be the next stock that goes into stage four. And I think it's taken a little bit longer because the average consumer in Costco is actually a pretty high earning couple, I guess. I just learned this on a Twitter space that I was on today. And it makes sense that it was able to hold up for such a long time. But as the economy weakens, as the average consumer weakens, this is below declining 200-day moving average. We gap down on earnings. We had 2 days kind of a rally and then gap down at the 5-day moving average. Um, this I would just short on a green to red move and then keep my stop over the highs of the last 2 days. GEV, we've covered this a couple times. It, I, I think this could be a long or a short setup. Like, take your pick, because it is such a clean mover when it gets going, and it really hasn't done anything super wrong except for not showing relative strength, while the rest of the like energy names have been super strong. We've got two resistance gaps that we'd have to fight through if we're going to show strength, and we're below the closing price from the earnings gap up back in July. And the market from July has been basically straight up. So big relative weakness out of GEV this entire time. Just looking for an uppercut and failure of the resistance gap here at 615 as the entry. Stop would be above 630, just above the 50-day moving average, the secondary resistance gap, and the HVC from earnings. BE kind of covered this on the leaders list. Awesome reaction from the 20-day. Like this was the trade that you would want to put on. But now we're starting to see kind of expanding daily ranges without price appreciation, with some relative weakness over the last like day or two. Just looking for a gap up and then a green to red move as the entry. Stop would be whatever tomorrow's high is. Don't want to fight it. If it starts going against you and starts ripping higher, this is a name that's just consolidating over the 5-day on declining volume. Even though the ranges are getting wider and we're starting to get extended on the indexes, the market can stay hot like longer than you expect. So if it does go against you, take your stop. Don't try to fight the trend. But if this does start to break down, I mean, it has gone from $15 to, what was it, $94. So there should be some room to the downside. We covered a couple of the quantum names, like the strongest ones: RGTI, IONQ, QBTS. QUBT is not one of the stronger names. It's up there in strength overall, but Friday we uppercut and failed at the resistance gap. Today we gap down, finished down 10%, a little bit lower in the daily range as well, where like IONQ and RGTI closed right at highs. This is one where a gap up, red to green, could be shortable versus today's high. Or if we take out today's low, then I would just use like today's close as the stop there. Next, we have SNDK. This name was getting wildly extended from 40 up to 140, 135 or so. Um, Little doji candle on Friday. So we did gap up and then kind of close near the low of the day. Gap up today, then close at the low of the day again, down 5.7%. So first red day in this uptrend. And this already had its kind of like check back to the 10-day. This is the check back to the 5. So if this is in like an accelerated trend, we'll get a gap up and we'll just continue higher. But if this is starting to get heavy, which it kind of feels like it, through today's low would be the entry. Stop, I would use like 3 or 4%. CLS, this was on the leaders list a couple of weeks ago. And after this gap up on September 5th, it hasn't really done anything right. Just went sideways while the market went up, eventually made new highs on September 23rd. And right after new highs, what happens? We follow it down with a unfilled gap down. We lose the 5 and the 10-day moving average. We get a big gap down on September 25th that gets bought up. That's solid price action. We eventually rally right into the resistance gap. And what do you see? Sellers are still present at that level. We put in a lower high. And after we reject off that key level, what happens? Another unfilled gap down, losing the 5, the 10, the 20-day moving average on a pickup in volume. Today, we gapped up like the rest of the market, and we still closed positive, up 0.74%, but we closed right near the low of the day. Just looking for a break through today's low, stop at today's high on this one as the trade. AFRM, kind of going back to that average consumer idea, just multiple unfilled gap downs, losing the 5, the 10, the 20, then the 50-day moving average. Couple day rally back up. We haven't quite tested the 50-day. Two different ways to play this would be if the market just continues to be red hot, wait for an uppercut of the 50-day moving average, then your stop would be over the gap zone. Otherwise, if we start to see some cracks early in the day and this takes out the low of the day, that would be the entry. Stop would be above the 10-day moving average and these two daily highs. LITE, kind of similar to the BE setup, just a monster stock, went from 46 up to 160. Pull back into the 20-day moving average. That got supported. We made new highs, but instead of taking out those new highs and continuing to trend higher, we immediately reverse off of that key level, have a distribution day on Friday, distribution day today, down 2%. This is another one, just a kind of a gap up, green to red move would be the entry. Stop. If you can make it to today's high, you'd have to use lower position sizing. Otherwise, just over the 5 and the 10-day moving average. Dave is up next. This is another one that I could see going either way. We've got nice tight consolidation under all the moving averages, but because the market's been so hot, that's actually a sign of relative weakness. Now, is that relative weakness that confirms to the downside, or is that relative weakness that we get rotation for? I think it'll depend on what IGV, the software ETF, does. So call back to IGV. We had that squat today. If this squat follows through the downside, I think Dave is a phenomenal short because it's already ran from $5 up to $286, starting to put in potentially a stage 3 top. And then you would have pretty tight risk just through today's low, stop above the highs, above the 50-day moving average on this one. And finally, we have MMYT. Whoops. This is one that I've been stalking. Big stage 2 uptrend from $22 up to $120. Big stage 3 top, very similar to SFM. Multiple lower highs on a declining 200-day moving average. July 25th, August 25th, September 25th, almost 22nd. Came back into the support gap. We don't want to short as you're going into a support gap because chances are you do bounce there. But now we've had 2 stalling days at the 20-day moving average. A little uppercut and failure at that level at 96 would be the entry. Stop above the 50-day moving average. Above 98 would be the trade. So that's going to be the daily market recap for Monday, October 6th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And once again, if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great rest of your night and go Cubs.